how to take entries on the 5-second time frame. Welcome guys to this video. I'm going to explain you and show you some examples on how I take trades based on the 5-second time frames. Super important is this concept here is nothing new to you, so whenever I'm going to explain to you, it's something which you have probably already heard because it is the technique that we already used on the 1 minute. 5 seconds are having one big advantage, and that means they are faster, so you will get the confirmation in the first place earlier than on the 1 minute, plus you are able to minimize your stop loss. And that's the whole job of the 5 seconds. Yes, you can do much more in the 5 seconds. I'm going to show you that one in this video as well, how to really play ping pong with the Euro USD. But this is something which is more advanced, so don't try to get too early in trading like this, because it can hit your stop loss multiple times if you're not applying it the right way. And the most important thing is here to really have the right POI, okay? So all the other things, of course, need to be also here: liquidity, break of structure, change of characters, bullish order flow or bearish order flow to understand why you are, all that good things, structure. Now, if you're going to apply one of these things the wrong way, then the 5 seconds will not help you out. 5 seconds is just explaining you, okay, at this POI where you're already looking for an entry because you expect price to come here, it will just help you to determine the right POI to really just use 1 pip stop loss. Okay, so that's at the end a really 1 pip stop loss strategy. Okay, now I'm going to show you right now something on the M15, because on the M15 this works crazy good, so that's how I'm using it, because I'm always trying to get into M15 demand zone or supply zone, and then when I understand the overall context and I say, okay, I guess price will go now to the upside based on the past history, because I understand what price is telling me, then I'm looking to go long. Now here, for instance, on the Euro USD, we've seen, if you check out the higher time frame, you are in this swing structure. So this is a bullish swing structure where price is currently in, and you expect price obviously to go to the upside. Now, I don't want to go here into too much details, okay, because this is something which we're going to do anyways in all our Zoom calls and our weekly outlooks, and I'm going to explain you anyway what kind of direction we should look here in this video. I just would like to go over how to use it, but basically here, just to understand my idea, is price is definitely bullish. It took here some nice liquidity, and it tapped over there also into a important demand zone, or here overall in this demand range. And what we've seen is here that price finally broke structure to the upside, and it has switched bullish. Now my expectations is that the price will, from here, from this demand zone, will reject it and will go up higher. Now here comes the 5 seconds, because right now, as I determined it here already, price potentially could go down lower till this. Potentially it could even go down till here, okay, for instance. Now the 5 seconds should just give me right now the confirmation which zone should I pick. Now, more than likely in the M15 demand like it is here, price will give me potentially even the confirmation, even if it would just drop down like this. Now, what will help me more out is if I go right now on the M5, okay, M5, I will determine this. On the M1, I will determine another demand zone right down there. Okay, so this is super refined right now already. So the M1 is super good. Now, if I would just pick over here a risk type of entry, just to compare this a little bit, I would need here a stop loss of almost 3 pips if I would like to cover up the lows a little bit. So 3 pips is what I need here. My job is to get involved into a trade with maximum 2 pips. I don't want to have more pips stop loss. Now the seconds will help me here to determine that. also, if you can check this out here, for instance, that could be also demand area, you know. So in this case, I would not clarify this as a demand zone, but potentially could be one, or potentially you have more demand zones, and the seconds will help you to determine which M1 will work out. Sometimes it's this one, sometimes it's this one, and this is why the 5 seconds are pretty good multiple times. So in this case, for me anyway, only this one here is good. And I'm just going to look right now in the 5 seconds how they will react when they will come to my area. So here it's already rejecting, but it's not in my POI. And that's important because I need to see how price is reacting when it is in my POI. Here, this is the wrong POI in this case. This one will completely get me out, you know. So if I'm trying right now to get involved into a trade, so for instance, that would be my ID to get involved in a trade. If this would have been in the M1, then look at this. It would get me completely out. So this is why it's super important to really understand where you are and if you are really picking up the right POI. And like I said, I would like to be in an M15 demand zone. Okay, this is in this case this one. So this is the whole thing here is the M15 demand zone, and I would like to be in an M1 refined one. Okay, on the M1, it's also okay sometimes to use the whole range, you know, so it doesn't need to be right now only one specific candle. Of course, it's the best if you have only one candle like it is this one, but for instance, it's not necessary to use right now this small thing here, okay? Definitely not necessary. You can use it, but no need to do that, okay? Perfectly. So, what the market is here doing anyway right now is just providing us liquidity. Now this is good for us because a few traders already tried to go from here long, you know, but yeah, didn't work out as it was not the right POI. But technically, if I would view right now my confirmations, they would have been completely valid at this point. And this is the tricky part of the 5 seconds sometimes. Okay, so we're waiting, and right now you can see we're about to hit right now the refined one, and this is where we need to definitely keep our eyes on it. So a good tip and trick is to set alerts so that you are aware when price is in this area, and then you're just looking for the price action delivery, and then you will decide by yourself if price will give you the confirmations that you want to see. Perfectly. So boom, that is the movement back down. You can see right now the first time when price came into the zone, it broke structure to the downside. Here it provided us some nice liquidity, and where I would like to see price breaking structure again is basically exactly here, you know, exactly from where the price broke structure in order to tap into it is where I would like to see a BOS. Now if price will give me another move down, then of course like this, it will break structure here again, then I would like to see only this one getting hit. Okay, so let's see what price is doing. Moving down. Now this kind of thing is moving crazy, you know, so you need to really be super full concentration here when you're trading like this. Okay, nothing. This is valid. Now I'm bullish. At this moment right now, I am bullish, and I'm just looking for price to give me right now my push down into my zone. Now look at this. Let's just let a little bit run. Okay, it's moving good to the upside, so I like that. The more it will break to the upside, the better it is. Now for instance, you even broke this one. Now what I like to do in a situation like this is also to come to the 1 minute to see if the 1 minute, look at this, even the 1 minute gave me right now a break of structure. Now this is super good because it will just give me extra confluence on my setup. Now what I do is on the 5 seconds, I'm just determining my demand range, you know, because here order flow has switched at the moment when we broke structure, and I expect price to come all the way back down till this zone. So this is my entry zone. Now what I want to see is, of course, a little bit of inducement, a little bit of liquidity. This is this one here. Now what can I do in a situation like this is to just minimize this whole thing. I'm not happy with that as it's a super big range right now. What you can do is placing your buy limit in a situation like this, putting your stop loss below this demand zone, and what you can do is to move on till 1 pip. So for instance, you are somebody who say, okay, my strategy is based like that. I'm just going to execute only if I get one pip stop loss. What you can see right now here, if you would like to refine this demand range, you will see here something interesting. You see here that from here price is moving back down one more time, and you got here a gap. More than likely, when you got gaps like this, they like to get filled. So I would just use that one candle, that candle before the gap, and view this whole thing here as my demand range. That's how you can refine it. Or if it's for you too complicated to understand this, just use this. Okay, the tool 50%, and you just put your buy limit exactly there, and you will get automatically a pretty good risk reward. Okay, yeah, that's it. So I would just do it like this, It's already at 1 pip, so you can do it, for instance, like this. 1.1 pip stop loss, completely fine. I like to just use here 1 to 2 extra pipette, because I don't want to get out of this trade. Of course not. I don't like this. Okay, and then we're just waiting to price will come into it. Yeah, moving crazy to the upside. This is not a problem. Okay, problem will be only at the moment when price will just go crazy bullish. If it will just really go beyond this, then you need to determine new demand ranges. Okay, in this case, look at this. It's moving back down. And yeah, almost here to fill the gap, so this gap is already filled on the other side, of course, but still these gaps are pretty good. And as you can see, price really came crazy to the downside, and in most of the cases, guys, you can always get that 1 pip stop loss. It's almost every single time possible to get for that 1 pip. I would not go below it. Okay, you can try it. I would just not recommend it, as it's just too crazy to just go below 1 pip from my point of view. And I don't know how many brokers will respect that, with the spreads, with the commissions and all that stuff. Yeah. Well, that's basically, that was right now a clean buying opportunity. When do I close? Well, as I explained to you multiple times, 20 to 40 pip is what you can close. Why? Because if it's right now the real movement, then you can definitely let it run for a longer time period, because you expect some bigger movements. But basically on the Euro USD, if you can catch something between 20 to 40 pips, it's already good. So whenever I got always a 1 to 2 pip stop loss, and I'm closing that at 20 or 40 pip risk reward, depending on what kind of stop loss I really got at the end. And if it's something between 1.5, then it's obviously 30 risk reward ready to close. So simply mathematic what you need to use here. Okay, great. So that is the first trade. So what we'd like to see right now is, we just follow how the market will move, and we're just looking for the next potential POI for our trading, So you will like right now to just follow this structure. So as you can see, we didn't broke yet structure, but I guess we will. Yes, here we got right now finally the break of structure that we wanted to see. It looks like it's just moving on, but yeah, this is right now anyway not the time where we would like to trade, So always try also, whenever you're backtesting something, to get involved in trades where it makes also sense for you where you take it. Okay, depending on what session you trade. But yeah, I'm just going to go right now over some examples just to make it to you more clearly what price can do. For instance, right now here we got a new demand zone. So we're right now in this bullish order flow. So we expect price to continue to go bullish, and we got here an M15 demand zone, and we got nice liquidity here. Okay, so price failed from here to go up higher. Okay, failed to break this. So it's good, because that means that this is liquidity. We'll grab it and we'll go up higher. So just quick understanding of this situation. Okay, now it was too fast. Didn't thought I would just go back here. So M5, refining everything down. What you can see here is only one demand zone. This is this one. One nice M5 demand zone. Let's move on the 1 minute. The 1 minute we have What do we have? We have two demand zones. Okay, it's okay to use this one. Of course, this is the best one because it's right in the middle of the zone. And you got another one right up here. This one could be also one that works. And this is why the seconds are so great, because the seconds will tell you right now which one to use. Okay, so let's just let the price move down. Okay, you're in the first zone, 5 seconds. Let's see what the 5 seconds are doing. Okay, nothing. As you can see, it came all the way back down. Okay, so no break of structure, nothing. So we can just delete the zone, not necessary anymore. But here, look at this. We are waiting right now for price to give us the final confirmation so that we can really get involved in this trade. So it's now not really rocket science. We just wait for our break of structure. Okay, and ideally we would like to see price break this, okay, because that's the real structure. I would also view this more than likely like this. Whenever you're playing with this substructure things over there, it could be just a little bit tricky, but still, from my point of view, valid to look at these ones as well. I would just use it like this. This is the way on how you really get the best confirmations. It's also the way on how we use order flow at the end, and it's good. So let's just see what price is doing. So yeah, this is the moment, you know, we broke structure. So this is the moment where I even would consider right now, okay, this zone will probably work. And I just need right now to find my entry zone. Where is my order flow demand zone that I would like to use? Well, in this case, you got two. You got this one. This is one potential demand zone and the lower one here. Now, the thing is that the first one here doesn't have any liquidity, okay? It needs more than likely something, you know, and that would be the liquidity for it. So this is why I would say here from the start, this is not the best demand range. This one is better because it has liquidity, okay? That's how I would view it. And we're looking at it. I mean, yes, you can enter this. It's not a problem. But don't be surprised if it will hit you. So as you can see, it really came all the way back down. And what you can do in a situation like this, if you're not sure what it is doing, then just place 2 buy limit orders and you will be safe. Okay, then you will lose one position, but the other one will probably succeed. So the way I would do here, my buy limit, because we know there is liquidity a little bit below it, and the way and how it is right now, it's for me totally fine. 1.6 pip stop loss, it's okay. I would hold it like this, and yeah, price is moving. Price is moving. Any additional confirmation? No, not really. What you can do also, that's interesting, because probably you missed this trade. For instance, you're missing this trade, so you're waiting, and what you can see here is price is forming again demand range. You know, so this is still a demand range where price could come. It's this one or this one. We don't know. So what you can do is again 2 buy limits. Sometimes you just don't have any other options. You just need to wait for it. And let's see. Okay, so you just let it run and you're waiting for price to come to the low one or to the upper one, and you can just use the next demand area. Yeah, ton of liquidity. But as you can see, it grabbed it, yeah, and it's just moving up like nothing has done. Great. So that's the same story. We close at 20R and we just let everything run. So I hope that this concept is clear, guys. It's, yeah, at the end, not really difficult. Now, the example that I explained to you right now was not the best one. Why? Because it's, yeah, 3 o'clock. It's a little bit late. So we would like to see now price coming to our session zone, and this is where I would like to look for next opportunity. So let's see. Here price went up, broke structure. Okay, so this looks to me right now like we have another. Look at this. Yeah, in this case, it did not even get our 1 to 20 risk reward. But it is also not a textbook example because it was right now not at the time session where we trade. But as you can see, it really works on every Asia, even in the Asia session, works pretty good. Right now for me, I just see here a new opportunity because price broke structure here, but was only successfully, let me just delete this whole thing. So it broke structure here. It was only valid the moment when it closed here above it. But as you can see, the whole order flow switched back bullish. So it has been bearish, and then here back bullish since price took out the highs. So what we can expect is price to come to this and to see from here some movements to the upside. So we would like right now to refine everything. What we can see is this M5 demand. Let's check out the 1 minute. If there is something on the 1 minute. Yeah, on the 1 minute, again, we got two zones. We got this one. We got this one. And this one. And potentially the lower one as well. What I don't like about the lower one, and this is why I would not really include this, is because it has no M5 demand in it. Okay, so this is not a real M5 demand. This is the real M5 demand. You can see there are the wicks where price reacted from. So this is why I'm not sure if it will come all the way back down, but still possible, you know. So this is just from my first view. If I just will look at it, I would say, yeah, not sure. But on the M1, it's valid. Yeah, okay, it's valid. Sorry, it's valid because it broke structure here. So right now, this is a good example for the 5 seconds because we have absolutely no clue, you know, no clue which demand zone will work out. Okay, so let's see what price will do. Let's see the moment when we will tap into this area. Or are we even going to tap into this area? That's the more interesting part. Okay. In this case, this is a no trade. Didn't work out. It didn't came to it. So let's just follow M15. And let's just follow again. Oh, it's still valid. Look at this. Sorry, it's my fault. These are still valid. Why? Because price broke structure more to the upside. Now this is pure liquidity now, so this will make now everything more interesting right now. So the whole price action is right now even better than I thought, because right now you have a lot of liquidity which the price could just grab from and it will just use it. Okay, so let's just have a look what price will do if it will return to it. Pushing up higher. Okay. We are here. And we check out M1 till price will come to it. Perfectly. 5 seconds. So look at this. 5 seconds. Did not even react off the first one. Nothing. You know, nothing was here. So let's just delete this. And now you see the first interaction here. You got 11 o'clock, you know, so you are in the London session, but should be soon over, you know. So I like to stop at 11 o'clock, so I'm still looking at 11 o'clock for some options for trading. But look at this, you got BOS to the downside, and here to the upside you can see right now a charge. Okay, a charge, it could be also enough for the 5 seconds, because right now you are already in M1 PY. You just got another one below, but as I mentioned, the problem with this one is that you don't have an M5 demand in it, and this is an M5, and which you refine down to the M1, and I would say this is in all cases the better demand zone, which will work out. So let's come here to the 5 second. So you got charge, and you got this as your demand range. That's it. You can now just put the buy limit over here, okay, covering up a little bit of lows, and you just enter this trade. because you are already in the M1 demand zone. Everything looks good. You got here, this is your demand range because it was responsible to give you charge, you know. So that's at the end the real thing, because price just created a new demand range. It is this one, and it is valid since the moment where you've seen charge. So order flow has switched. So for us, we expect price to come up higher. And yeah, let's just let it run here, see what price will do. In this case, okay, his stop loss is super crazy tight. What you can do is, of course, just use it like this, you know, to really get into this trade, because in most of the cases you will be not able to get in all trades, okay, especially if you're refining it super crazy. I would always try to just put it at 1 pip. Now in this case 0.9 is completely fine for this trade. Yeah, let's just see. Yeah, it's moving already crazy. Okay, here the same thing, closing at 120, or yeah, depending on where you would like to close it. So there are no clean rules for that. Okay, then I would say let's just have a look on some short examples. Now we dealt a lot with long. Now let's just have a look on some nice short options. Let's just see what price is the best. Yeah, this one. This one is good. So here, for instance, at this example, we need to understand, of course, the all higher time frame. Now I'm trading USD every single day, so I know at the end every piece of price action. So here we have a pretty nice example for some shorts. What we can see here is we're still bullish. Okay, so we are in this demand range, the demand zone. It's moving up higher, and what we would like to see is price shifting, you know, and that was the shift. Price wicked below it, and that one made this supply zone here valid to look for shorts. Now within this supply zone, what we do is we're refining everything down. So you got here M5 range. Let's check out the M1. What we got on the M1? We got, yeah, also here this supply range. Of course, everything can be, you know, you can always refine everything to the maximum, but what I recommend is always to have a look on the whole M1 range, because otherwise you may miss a lot of options here, you know. So especially in the 5 seconds, the market is just moving crazy fast, and you will like to see price, yeah, you don't want to lose that trade, you know, if it's so clean like it is in this example. Yeah, so we are in the M1 range. You need to admit it, you know, because if you're using only the range, probably you will make more losses before you will take the real entry. So what you can do is to just minimize your stop loss, your risk per trade in a situation like this, and would say, okay, probably I will need 1, 2, or even 3 tries before I'm going to get it done. 100% that you will always have the right, it's not possible, you know. But yeah, let's have a look. Now here, 5 seconds are in the M1 range. Okay, so you can see here a clean BOS. You got here what you would like to see price to break, you know, to really confirm you. Let's just have a look how this will be developed. So you would like to see this here getting broken. Okay, so like I explained it to you on the buy option, you know, you would like to see price breaking the structure to the downside, because here this is the last BOS to the upside, this is the low. So your swing structure is this, you know, and in order to confirm that this will go bearish, you would like to see price, of course, breaking this, then coming up higher, and then bearish. That's the idea of it. Let's move on. No close, nothing, a ton of liquidity, and no close, nothing, you know, this is nothing. This is right now the first BOS, as you can see. Now I know it looks super tiny. For the majority would say, okay, crazy. I don't know if I will recognize this kind of thing, but you need to recognize these kind of things. And this here is your 5 second supply range, because from here it brought the price that much to the downside, so it closed even below it. So even a wick, as we did in the last example, would be enough because order flow has switched successfully bearish. So everything is fine. Now here is my sell limit. I'm going to place it right up there. Like always, a little bit more above for the extra pipette for not getting here a loss, and that's it. Now if you would say, okay, no, I would like to make it more to the upside, yeah, depending on how you would like to have it. For me, it's okay like this. Boom, we're in the trade. We expect price right now to follow bearish order flow. Yeah. Okay, returning back up. Okay, you know, this is okay. Why? Because price didn't broke anything. It just came a little bit more to the upside. This is why it's important to have a little bit of extra pipette, and boom, price starting to move down. Okay, so that was definitely a little bit of a trap, you know, so it for majority looks a little bit difficult. Everything's still fine. As you can see, it even went up higher, but yeah, didn't close above it. Everything's still fine, you know. If it would be here above my stop loss, then yes, I would have been expecting it to go back up higher. Okay, yeah, that's actually it. So here the same kind of thing. Put your take profit wherever you feel comfortable with your setups, and that's it. So I guess price from here is moving crazy to the downside. Yeah, so you can catch here definitely a ton of risk rewards. Well guys, that's it for this video. Go right now to the charts, apply the new knowledge, and try your best to get always the right POI. As I said here multiple times in this video, it's more than likely about the right POI, not about how you will really entry at the end. This entry model is just an extra sauce for you, but yeah, more important is really to determine the right POI. So I wish you the best with this new element in the strategy, and see you in the next videos.